Hey everybody, it's Hani Mahmoud, CPA, owner of Accountable Consulting. Hope all is well. In this presentation, I will detail all the information you need to know to determine whether you can itemize or not. This is a hot subject and often gets thrown out a lot, so I hope this presentation will be helpful. If you would still like a PDF copy of a tax organizer detailing these items, you can still find them on my website. Again, I encourage all of my current and future clients to watch this video, as it will allow me to prepare your taxes in the most efficient way possible and effectively let you know whether you can itemize or not. So sit back and enjoy, and I hope you learned something new. Overview of itemizing. All right, the $1 million question is, Hanny, do I qualify to itemize? I mean, all my friends are getting these big refunds. Where's my big refund? They take so much money out of my check. Sound familiar? Can you tell I've heard it before? To understand if you can itemize or not, you first need to understand the standard deduction. The standard deduction is a deduction given by the IRS depending on your filing status. The various filing statuses and standard deductions are listed on the slide. In order to itemize, you must exceed the standard deduction the IRS provides based on certain deductions, which I will detail in the next slide. All right, itemized deductions. Schedule A is the form you file to determine whether you can itemize or not. The categories on the Schedule A are listed on the slide. To help paint a picture, consider each one of these categories as a bucket that must be filled up. Once the buckets exceed the standard deduction provided on the previous page, you now can successfully itemize on your tax return, which in return will help you reduce your taxable income, which will reduce your taxable liability further, as you are now getting a bigger deduction than the standard deduction the IRS provided you with in the first place. Example, you are single. The standard deduction is $6,300. After completing the Schedule A, the form which you itemize on, you have $10,000 worth of deductions. You will therefore take the itemized deduction total of $10,000 instead of the standard deduction of $6,300 because it is greater. Another example, you are single. The standard deduction is $6,300. After completing the Schedule A, you have $2,000 worth of deductions. Because you didn't exceed the standard deduction, you won't itemize and just take the standard deduction. I'll explain all these categories listed in this slide in greater detail for the remainder of the presentation. So sit back and I hope you learned something new. All right, medical and dental expenses. For this category of bucket to count, the medical expenses you incurred must exceed 10% of your adjusted gross income. Example, you made $100,000 this year and you had $11,000 of medical expenses. Only $1,000 of those medical expenses you incurred would count towards this bucket or category in this scenario. So I've listed some various medical deductions on this slide. If your medical expenses exceeded the 10% threshold over your adjusted gross income, please provide me with those expenses you incurred throughout the year. All right, taxes you paid. Please review the items in the slide above and let me know if any apply. Depending on your salary, your W-2 state withholdings can qualify you to exceed the standard deduction just off that one item alone. Regarding the ad valorem tax, this is only the tax portion of your tag, not the actual tag fee. Just something to keep in mind. If you have any further questions, let me know. All right, interest you paid. For all my homeowners, this is another great reason why you should own a home. If any of the following items apply on the slide, please let me know. You will receive a year-end statement from your mortgage provider with this information. Once you receive it, please send. Also, if you just closed on a property within the year, please provide me with your HUD-1 statement. Prorated taxes on the HUD-1 could be deducted as well. Regarding investment interest, if you purchase any stocks on margin or through a line of credit, please provide me with your year-end stock brokerage statement so we could take this deduction as well. Exceptions may apply on how much investment interest can be deducted, which I'll go into at the time of preparing your return. If you have any questions pertaining to any of these items, please let me know. All right, gifts to charity. Another great way to rack up some deductions to help you exceed the standard deduction. Four types of charitable contributions, and they are listed as followed. One, cash contributions, straightforward. Could be a religious organization, Goodwill, Red Cross, etc. Again, you must donate to a 501c3 which has a tax-exempt status with the IRS. Two, service contributions. If you donate your time, there are various deductions that you could take. One, miles you drive to and from the charitable events, including any parking or transportation charges. 2. Travel expenses, convention fees associated with volunteering at an event for the charitable organization. 3. Uniform, any cost and upkeep of the uniform that you must wear while donating your time and service to that charitable organization. An example could be you must wear a company polo and it has to be dry cleaned frequently or every week. All right. Third one is expenses paid while a student is living with you. Interesting enough, this is a deduction. If this applies to you, please let me know so we can discuss this deduction further. Remember, the student cannot be your relative or dependent. Last but not least are non-cash contributions. These are just for items that you donated. An example could be you gave a TV to Goodwill. If you donated more than $500 worth of goods, please provide me with that information indicated on the slide. Okay, casualty and theft losses. Let me know if you had any losses that were not reimbursed by an insurance company that were listed as examples on the slide. An example would be you were in a car accident and your car was totaled. The fair market value of your vehicle was $40,000 at the time, but the insurance company only reimbursed you for $30,000. You could potentially have a write-off that which could help you exceed the standard deduction. If any of these apply, please let me know. All right, the magical employee, job expenses, and certain miscellaneous deductions. For anyone that comes out of pocket for these expenses, the following slides are great ways to potentially maximize your refund. For these deductions to count in your favor, you must exceed a 2.5% floor of your just gross income first. An example, you made $100,000 this year. You must exceed $2,500 of expenses first in order for this bucket to fill up. Before we dive into the possible deductions listed on the next couple of slides, I want you to stop and think hard about the expenses you come out of pocket for every day at your job. I've listed most of the expenses I've encountered throughout the years, but if you come up with anything I haven't thought of, please let me know. In case you were to be audited regarding these deductions, you need to make sure these deductions are an actual part of your job duty. If they are not, they could be disallowed by the IRS, again, if you were to be audited. Some key deductions on the slide I want to touch on are as follows. Cell phone. Most people use a cell phone all the time for work. We live in a day and age where our work email is connected to our phone. If you were not reimbursed by your employer for your cell phone, you could deduct the percentage of the monthly bill that you use for work purposes. Example, cell phone bill is $100 a month. You use your cell phone 50% for work. Therefore, you can deduct $50 a month for your cell phone. You can also write off expenses associated with repairing your cell phone or cell phone accessories up to the amount you use your cell phone for work. If you had to buy a new cell phone or had to buy a new laptop for your job, please let me know that information indicated on the slide. Another interesting deduction are gifts to clients. They are deductible up to $25 per person. Last but not least, you can write off any type of professional insurance your job requires you to carry. Example, if you are a doctor, you can write off your professional insurance or malpractice insurance your job makes you carry. If you have any questions pertaining to any of these deductions, please let me know. All right, here are some more deductions pertaining to the expenses you incurred as an employee at your job that were not reimbursed by your employer. Most of these deductions are pretty straightforward. Some key deductions on the slide are uniform costs. A uniform has to be job specific. Example, it could be a firefighter outfit, military fatigues, or a company polo. If you have any questions pertaining to any of these deductions, please let me know. All right, mileage you drive for your job. Okay, we're still on job expenses. I know it's a lot of them. But if you drive to multiple clients throughout the day for your job, the mileage you drive could be tax deductible. Please review the slide above and let me know if you have any questions pertaining to any of the items. A great app on the Apple Store to organize all your mileage is Mile IQ, so keep that in mind. All right, so we're continuing on mileage that you drove for your job. When determining if you have enough mileage expense to help you exceed the standard deduction, you can either take the actual expenses incurred for your vehicle or a standard mileage rate assigned by the IRS. Typically, the standard mileage rate is the best option. But if any of this applies to you, please let me know so we can discuss it further. But I've detailed it on the slide so it could be clear and cut for you. Okay, the infamous home office deduction. If your employer allows you to work from home for the employer's convenience, you could take a home office deduction. Again, it has to be for the employer's convenience. I've detailed all this necessary information in this slide that I would need in order to prepare that home office deduction schedule. I wanted to give clarity on the direct versus indirect expenses. Direct expenses are related to the actual office space in your home. Example, your home office is an empty bedroom. Let's say you painted a bedroom only. When providing me with this information, please indicate the repairs are directly related to that home office. Okay, so indirect expenses are related to your overall home. Example, the utilities, mortgage interest, property taxes, etc. typically all apply to your overall home. So if you have any further questions about these items in the slide, let me know. All right, other miscellaneous deductions. I promise this is the last slide. If any of these deductions apply, please let me know as they are deductible again and are subject to that 2.5% floor of your adjusted gross income. All right, we're at the end of the presentation. Thank you again for watching. I hope this video was informative and will serve as an aid in helping you gather all the tax documents needed to ensure you actually can qualify to itemize. Please make sure you retain documentation for any of the items discussed in this slide in case you were to be audited by the IRS. My contact information is below if you have any further questions. If you or anybody else is looking for a CPA, please share this video with them. Thank you again, guys, and all the best.